Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of $102,800. That's made up of the $58,071 in my US stake portfolio and then the $44,800 in my Vanguard Australian portfolio. Comparing to last week, my stock portfolio is up around $1,800. Some of that is a deposit. I deposited around over $500, I think, but the rest of it is all in gains. It's been a pretty good week recently for investors, and it's not been the worst start to the year as well, with a little bit of a retraction at the start of January, but things have really bounced back, and my portfolio is up around $2,800 this month. So just to quickly show you guys what I'm holding, so you can see I'm up 34%, or around just under $15,000 in my stake portfolio. And in my Vanguard portfolio, I'm up around $8,000, just under $8,000, I believe, in total. So it's been pretty good for me. I've been investing for a few years now, around 4 years, just over 4.5 years. And if we have a quick look at my holdings, you can see I've got many of the big tech giants, such as Apple, Amazon, Google, and Microsoft, to name 4. And then my biggest holding by far is VOO, which is a market tracking ETF. So currently that market value is around $17,400 for VOO, and this currently takes up around 50% of my portfolio. As you can see, it's up around 87% in the last 5 years, so pretty much over the time I've been holding it. And in the last year alone, it's up 24%, where if you know much about markets, you know that's a very good year for the S&P, as it's kind of predicted to average around 9 to 10% per year on a historical average. So it's been a very good time for for investors. So this has just been a good sign for me to keep investing my money over these past few years, and just kind of shows you the power of compounding as well, where if I was just letting this money sit in my bank account over the last few years, I would have been a lot worse off. So yeah, it's been good for me recently. And again, going through some of my major holdings, you can see I sold out of some of my Apple, but Apple's a bit of an interesting one actually. It's really bounced back. It had a big dip here, and then if you look at the last week, it's up 4.2% as the stock kind of rebounded. But yeah, overall, it's one of my biggest holdings, or it has been traditionally, at around $3,280 or nearly 14 shares. Next is Amazon, which is just a little bit bigger than my Apple holding nowadays, and that's trading at $237 a share, and is up around 27% in the last 6 months, which is quite amazing. For my position, I'm up around 27% as well, and up around 750 USD. And this was a stock that I was buying into recently after I sold out of Apple, or I sold a portion of my Apple. I allocated some of those funds to Amazon, just because it's just a company I see better growth with going forward than Apple. It was hard to justify the PE ratio of Apple, and I really see good growth opportunities in Amazon. One of the investors that I watch here on YouTube as well, Joseph Carlson, who also does portfolio tracking videos. It's one of the positions he holds in his portfolio, and I agree with a lot of his investment thesis on it. Obviously, you need to go do your own research and come to your own decisions, just so you justify your holdings, and you can kind of, if things do trade down, you can make the most of it dollar cost averaging in, and not selling at an unfavorable time. But you can see my average share price is around $185 a share, so it's not been a bad investment for me recently. Next is Costco. Costco had a bit of a dip recently, as you can see here. If we just look at the last month, it's up 6.5%, which is quite good. But when you look at the last 6 months, you can see here is when it kind of pulled back, but it has really been rebounding, trailing back up, getting closer to that $1,000 mark again. I only own 1.3 shares, or $1,312 in equity. So the position is quite small. But it used to be a bigger one of mine, but I sold a bit of the position as well. Google, like Amazon, is a position that I've been growing. I sold some other positions I had, and I sold a little bit of money in like JP Morgan as an example, and I invested that money into Alphabet. Some of my Apple money as well, I think, is in Alphabet as well. So that's where the two kind of money from those positions has gone. And as you can see, in the last month, it's up 6.76%. and up 19% in the last 6 months, and 45% in the last year. So it's had a very good year if you've been investing. So in total, I'm up around 26%. The reason why this is a bit lower is because, again, I've been buying more recently. I have held Alphabet shares previously, but because I've been buying recently and dollar cost averaging, it means my average share price is a little bit higher, but it's still only $161 a share compared to the $204 it's trading at now. So that's quite good as well. One of the reasons I was so invested into Google was because of its PE ratio as well. When you compared it to the other Magnificent 7, it seemed a lot cheaper. And I still believe that a lot of negative sentiment was priced in at the time. There was a lot of worries about Google's AI and if they were falling behind, if they were going to lose their search monopoly, which is obviously where a lot of their ads come from and where the revenue gets generated. But I try to keep a long-term approach. Again, even though the stock is up good this year or in the past 6 months when I've been holding, I kind of want to still keep a 5-year to 10-year kind of window. Again, I'm getting closer and closer to hitting the 5-year mark of investing. That'll be coming up in July this year, or maybe August, which will be a big milestone for me. And these 5 years have really flown by, and it's taught me a lot of lessons. I've had times, especially I think 2022, when my portfolio was down over 20% in total, and I'd never really sold out too much of my key positions. I used that time to buy in more, and then I kind of reaped the rewards in 2023 and 2024 with some good years in the market. But again, let's say 2025 is not the best year. That's not going to change any of my investment thesis. I'm going to continue to dollar cost average in and invest into stocks I believe in. A good example of that is Microsoft. Microsoft's last prior year is only up 4%, so not a very good year for investors. If you look at the last week, it's down 2.26%, and the last month's also down over 2%. So it's not been a very good time recently for Microsoft investors. If you've held this stock, then let's say you only got, in the example, 4% this year, and the S&P was up 24%. That's obviously a 20% difference that you could have had just being invested in the S&P, and you probably would have got a high dividend payment as well. So yeah, it's not been the best time, but again, Microsoft is a company I believe in long term. They might have some headwinds. Potentially when I was looking at it, especially when the stock was so high, close to $470 a share, I really probably could have taken some gains the same way I did with Apple. But I didn't do anything. I just kind of sat on the position. It was trading quite expensive. I watched a lot of stuff and read, and it was pretty consensus that the stock was quite expensive at the time. But I decided not to take any gains, and I just kind of sat on the position. I'm still up 32%. My average share price was around $314 a share, and I'm up around $1,370, which is still good. But yeah, it was a bit of a interesting one looking back. Kind of maybe a different decision I could make. But again, going forward, I think Microsoft has one of the best business models like Costco, and I don't see myself losing money in the long term. So I'm more than happy with holding through these kind of rough times now, and hopefully things will just continue being stronger going forward. Because years like 2023, I was actually quite fortunate to be holding Microsoft, and it was one of my biggest positions. So if we have a look here, this is pretty much January 2023, and if we keep following it through, you can see here is January 2024. So a very good year it was in 2023. So it really carried my portfolio's returns that year. So I can't complain that I had a bit of a down year this year. Next is looking at my Vanguard portfolio. So my Vanguard portfolio has been the main portfolio that I've been growing. If you've been tracking this channel, a goal of mine is to get it to $50,000, and I'm currently only $5,200 off. So I was kind of aiming for hitting this in, originally it was around February, March, but I really think March this year, I should be able to break the $50,000 mark, hopefully, in my Vanguard portfolio. So that will be another big milestone to tick off. I remember when I ticked off the $50,000 mark for my stake portfolio, that was quite a good feeling. I'm getting closer and closer to 60,000 now. And now that my portfolios have broken that $100,000 mark, the next big milestone for me is 150,000. Whilst that seems quite far away, I could set a goal for 110 or 125. I think kind of keeping that 150K mark will keep me kind of focused on that. And I think it's very doable. I think as I continue to invest this year, it is very possible, especially if it's a strong year in the market. I have obviously started a new job towards the back end of last year, so I have extra income coming in, and I plan to use this money to invest in my portfolio. Such things like my dividends, I'm hoping to hit $2,000 in dividends this year. And again, I'm going to reinvest all those dividends back into my portfolio so I can hopefully reap the benefits of long-term compounding interest. Whilst we're speaking on dividends, I will touch on that a bit later and go through my dividends I received in January. It was my biggest ever dividend month, so more to go on that. But the stocks that I hold, or the ETFs I should say, in my Vanguard portfolio are VLC. This tracks the largest companies in Australia. It's an ETF of around 20 companies, and that's trading around $85 a share right now. This has gone as low as 83, 81, and now it's kind of bounced back recently. But yeah, the market value for that is around 16,307, and I own 191 shares. The second position is VGS. VGS is an international shares ETF. So what this does is it tracks the largest companies across the world pretty much. It holds, excluding Australia, it's around 1,500 positions, I believe, and it's holding many of the big positions that I hold in my stake portfolio. Such as the big tech stocks, the banks, but yeah, it's a bit more of a global ETF. One of the reasons why I am invested in VGS is because VOO was not actually available on Vanguard Australia, which was quite sad, because if I could, I would be investing in that. But it's had quite good returns. I believe it's up around 20% or so the last year, which is quite good. And it gives me good diversification across the globe. Whilst it is heavily weighted towards America, like I said, I still get some diversification in other major countries and continents. And that's trading at close to $145 a share. Again, this did trade down to around 141, and I did buy in a little bit again, so it's traded up, which has been nice for my portfolio value. And that position is getting closer and closer to 30,000, which again is going to help me getting closer to that $50,000 goal to tick off. But I'll keep tracking these videos online, and like I said, hopefully in March I can hit that goal of $50,000 invested. Next is going through my Excel spreadsheet. So this just kind of hopes to give a better view for the viewers, just to kind of see how things are broken up as a percentage and just kind of comparing the two portfolios. As you can see in my American portfolio, VOO, which is my market tracking ETF, is basically 50%. That is how I plan to keep things. I want to keep VOO as 50%. I don't think I'm some amazing investor or stock picker, so having exposure to the broader market just kind of gives me the opportunity to pick up the market gains, like I compared with Microsoft. If the S&P has a 24% year like it did and one of my other positions falls short, I can hopefully recoup that kind of money I lost out on, and I'm not overly levered into one company. But I do, some of the positions like Microsoft is 16%, which is a bit big for me. I would like to maybe reallocate those funds elsewhere, but more on that later. I'll see what kind of happens. One of the reasons I haven't been growing my American portfolio as much is because of the strength of the USD. The USD has really been kicking the butt of the AUD recently. It's down all the way to 62 cents, where even in September it was around 70 cents. So yeah, there was a point where I could put money in and it would be pretty good exchange rate, but at the moment it's quite rough. So that's one of the reasons why I'm growing my Vanguard portfolio as well, because I don't have to worry about that, and there's less fees on Vanguard than what there is on stake. So that's one of the benefits as well. Speaking of the Vanguard portfolio, you can see it's currently split 64% to 36%, with the majority being in my international tracking ETF. The reason being is because I'm still young, I believe my main focus needs to be on capital gains, not dividends. And whilst the Australian shares have performed quite well last year, I do believe internationally I can get better gains capital growth wise, but the Australian index does give me some more diversification as well. And like I said, any dividends I do get will be directly reinvested back into the respective portfolio. So this is kind of how they're looking. What these two graphs here at the bottom show is kind of the trajectory since I've started tracking them. So I was investing a bit before this as well. Obviously, my portfolios didn't just spawn at 17,000, but I wasn't tracking it here on my Excel spreadsheet. I even have some old videos on this channel back when my portfolio was sitting at around 10,000, even smaller, I think. That's when I really started doing these YouTube videos. But yeah, you can see over time just the power of consistently investing and compounding interest. For example, with my stake portfolio, it started at $17,000 all the way down here. And the most recent, at the end of, or going into February, end of January, I was sitting at $57,000. So that's been a really big gain, so $40,000 gain. Most of that is deposits. A chunk of that is also gains, like I said. But as this goes on longer, hopefully I can hit that $150,000 mark by the end of the year, or whenever the case being. Next is the Vanguard portfolio, all the way from $2,900 up to $44,000. So sometimes when I'm investing, you're just kind of putting in money over time, and it's hard to see the long-term kind of goals and things. When I put it down here on a graph, you can really see the consistency over time, and it really kind of motivates you to keep doing what you're doing, keep doing the right things. So everything's kind of been up, especially the Vanguard portfolio. Since I started it, nearly every single month the portfolio has gone up through deposits or through gains. So I've been really grateful with that. And then hopefully one day, if I want to buy a property or something like that, I can maybe take some of the funds out of my Vanguard account, maybe out of the Australian Tracking ETF, VLC, and maybe use that towards a deposit as well. But yeah, at the moment, the goal is just to continue to let these compound and take any money I get from them and reinvest it. And whilst we're speaking about dividends, I do track my dividends on here. And you can see last month was my biggest month ever in dividends. I received $398, so nearly $400 in dividends just for the month. In my Vanguard account, I get quarterly distributions. So that means obviously for the next 2 months, I won't get any dividends in Vanguard. But yeah, it was nice getting that $400, and I reinvested it into VGS. My stake portfolio surprisingly paid no dividends, which was quite weird. I was a bit confused when I was looking at it. Maybe because I don't own as many stocks that a dividend kind of pays. But yeah, it was quite surprising for me. But still a very good month. And yeah, I'll keep tracking it. Like you can see on here, this is kind of the dividends over time. So I need to update this, but you can see it's slowly getting bigger and bigger and bigger. So that's kind of the goal for these accounts. Even though I'm not a dividend investor, I'm not going to complain when I get it. So if we quickly change that, you can see there, the growth is just it's doing all the right things. It's going up, which is what you want to see if you're an investor. But overall, this was just a bit of a quick portfolio update. It's nice to do these and hold myself accountable. I was doing a lot of videos in December, especially around the Christmas break, because I had a bit of a break from work. But now I've kind of been back in the weeds of work and studying for CFA, and just kind of trying to keep myself consistent to do these videos every single week and do some shorts as well. But I'm getting closer and closer to 1,000 subscribers. I'm at 981, which is quite good. Subscribers have kind of slowed down because I haven't been putting as much time into YouTube. But yeah, hopefully when I hit that $1,000 mark, it will be 1,000 subscriber mark. That'll be pretty cool to tick off. And the more and more viewers I get, doesn't really matter. I mean, obviously I'll try to make the videos better, but I plan on continually doing what I'm doing and tracking these portfolios. They seem to be getting a bit more steam now, a bit more people coming and watching it, which is quite nice, and connecting with people who are kind of commenting on the comments on the channel, just kind of their thoughts and what they're doing as well is nice to hear. But that's all for now, and I'll update again with another video next week. Cheers.